Hello and welcome back to Perfect Spiral Capital. My name is Luke Tatum. I'm so glad that you are here choosing to spend some of your valuable time with me. Now, today I want to talk about what size life insurance policy should you start with. Now, the idea here, this is an infinite banking concept focused channel. Our company, Perfect Spiral Capital, we're focused on IBC. And so the question is not how much life insurance do you need to protect against loss of someone at an unexpected early time. The question is not how can I maximize the cash value in the first year. That's not what we're talking about. What we're talking about is you have decided already, after looking at other content on this channel, watching other amazing YouTubers, reading Nelson Nash's Becoming Your Own Banker, perhaps reading my book or watching my course, which you can find at perfectspiralcapital.com. But you've reached a point that you've decided you want to, quote unquote, do IBC. Infinite banking is not a product, it is a process. And you need to understand what that process is and why you would want to engage in that. But assuming you've decided to do that, how big of a policy should you start with? You want to get a dividend paying whole life insurance contract, preferably from a mutually owned life insurance company. And what's the appropriate size for that? Well, I was told by someone I know and respect a very good way to think about this. If you're doing IBC, again, quotes, doing IBC, if you're setting up a quote infinite banking policy, there's no such thing, there's just whole life policies. But if you're setting up a policy to implement infinite banking in your life, you are going to have a minimum premium you must pay in order to keep that policy in force. You don't want to be in a situation where you can't pay that premium. So all of a sudden, all four tires on your car are flat. You still need to be able to afford that premium. All of a sudden, you need to replace the roof on your house. Well, guess what? You still need to be able to pay that premium. Well, your appliances are failing. Well, you've got major medical expenses, et cetera, et cetera. Yeah, well, you still need to pay your premium. And that's not me speaking as an agent. That's me speaking as a fellow person who implemented IBC in his own life. A very common criticism of infinite banking is that, oh, it's just a bunch of agents trying to sell high commission life insurance policies. And, they're just selling you something. Nobody talks about this unless they sell it. Well, I definitely beg to differ. But I was doing this before I became an agent. I was captivated by the idea, and I stayed captivated by the idea, and that's why I'm an agent today. But back in 2018, I started my first policy with someone else because I was not an agent, and I still have that policy. And it's a teeny tiny little thing. It's $360 and some change every year. I used to pay it monthly because we used to be in worse financial straits. And back then it was $30.75 a month that I was paying. Now I was, of course, several years younger. I'm recording this in 2025. And so, I was younger. My premiums were cheap. And I'm happy to have that policy. And I'm going to keep that policy because these policies become more efficient as time goes on. But I probably started a little too small. I wish that I had started bigger. And so the question is, what's the right amount? Well, there isn't a right amount. I'm not going to recommend you a percentage of your income. It's a comfort thing. So if you're married or in a long-term relationship, you need to be comfortable, and so does your spouse. And if one or the other has a concern, you need to talk through it. Well, maybe we should scale back. I am in the habit of talking potential clients and current clients down from extremely lofty goals when it comes to their premiums. I am not trying to put you in an awkward financial position in the future. I don't want you to cancel your policy because it's not good for you to set up a policy and then have to cancel it in a few years. It's not in your best interest. So What's the right number? Well, the required amount of your premium, which if you're doing a, quote unquote IBC style policy, is probably not all of it. You're probably going to be paying some paid up additions. You're going to have some optional premiums. Be sure you understand the pros and the cons and how that paid up additions rider with that company works before you sign any papers. But you need to make sure you can pay your required premiums. And now your totally maxed out optional premiums, all the PUAs, that could be a little uncomfortable. And that's okay. It's a challenge. It's an optimistic goal. You don't have to do it. That's ultimately your comfort level, how far you're going to push that. But your base premium needs to be rock solid, the required premium, which might be your base premium plus a term rider, might be your base premium plus a term rider plus a waiver of premium rider plus a children's insurance rider. There could be a whole lot of things going on with that. But whatever you've got to pay, you need to make sure that you can. And that's how you create the appropriate policy size. Your agent should not be pushing you to pay more than you feel comfortable with. They should be working for you to design the appropriate size policy for your goals. Now, it often happens that I'll do that, and then someone I'm working with will come back and say, you know what, I want to triple my budget. And that's okay. I don't know what they were thinking when they made their original projection, when they told me, well, my budget is this. I don't know. When they get it, when the ideas click in your head, it's easy to get excited. And that's great, because if you catch this idea, if you get latched onto it and you get it, then that's when it's really going to take off for you. That's when the magic starts to happen, so to speak. But it's your agent's job to make sure that that's not anything crazy, right? Hey, hold on. Where's that money going to come from? Don't you have bills? And even the insurance company themselves will start to ask questions, particularly if it's 15% of your income or more going to life insurance premiums. They're going to start to say, hey, can they really afford to do this? Right? So there are suitability concerns. There are things that you need to know when you're going into this, but just focus on the required premiums. Okay, what do I have to pay? And talk through that with your agent. Now, if you want to talk to our team, or if you want to learn more on this, you can go to perfectspiralcapital.com. You can check out a free 11-part course that I've done on infinite banking. You can also find my book, which is available for $1 and was an Amazon bestseller. If that's of value to you, please go check it out. But either way, thank you so much for watching, and I'll see you in the next video.